today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling a problem with us out here. We have the Dow Industrials up 16, NASDAQ up 110, S&P's up 7.5, gold contract up $3, trading $19.81. You get silver up 11 cents, $28.71 an ounce. Light sweet crude up 73 cents, $43.34 a barrel. Notes and bonds. You have the 10-year right now trading up, down 4 ticks, 139.03. The 30-year off 24 at 174.31. And King dollar flat 92.124. Trying to make it back from lower prices out here this morning. It's got a long way to go, I can tell you that, folks. Euro's at 119, the yen is at 106.05, and the British pound is at 134 to 1 US dollar. Tom O'Brien, welcome to 1999.
Oh, man. Why isn't every stock just splitting, man? Seems like you just split, you go up 10%.
You go up 10%, and the new racket on the street, folks, is that selling, instead of secondaries, it's selling stock at market prices. And what's amazing about this is that it's actually the mining stocks that started this about a year ago. But this is how secondaries are going to get done. I suspect there's never going to be a secondary again. It's a no-brainer, pull out $5 billion, way to do it. And $5 billion, when I was listening to your program, Tom, is actually 20%, of Ford. If Ford sold $5 billion, it's just amazing.
Or 1% of Tesla.
Yeah, exactly.
Pretty cool.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade. Think or Swim, as we do every Tuesday, Wednesday, and Thursday. And if you want to understand the option market, folks, option strategies, futures, defined risk, let me see that. Defined risk. You better get some defined risk in this market, man. Ooh. Every trading day, 11 to 12 Eastern Standard Time. Kevin Hinks, what's going on?
There's a word to describe markets like this, guys, and the word is ridiculous.
Oh, my goodness.
On some of the things going on right now. But you know what? I think you're spot on, Tom. I think this is a new way that firms are going to raise money. Oh, you like my stock up here? There. How about $5 billion worth?
You know what, Kevin, what's amazing? Folks, if you look back in history, in human history, I never could figure out, think about wars and the revolution. Everyone lines up and just shoots each other, right? It's like, oh, my God, whoever figured out first that, hey, listen, don't line up, shoot around. And then when I saw this in the mining equities, about 8 months ago, it started in the mining. I says, well, why wouldn't everyone do that? Because it's perfect. It'd be like, let's say you, I, and Tommy are the bank. You say, okay, you can sell it when you want to sell it. Well, man, that's totally where it's at. Do you know what I mean? The right. Filing, you get the
especially, Tesla ended the quarter 2 with about $5 billion in cash. They want to grow more. They want to, build new factories and things like that. They're going to raise another $5 billion. It's probably smart for both sides because everything Elon Musk does seems to make this company better, so why not?
No, it absolutely is. And, folks, this is what's really crucial. And, listen, we appreciate you listening to us every day. This is where TD Ameritrade's into education. We're into education. This is really important education-wise to understand how this works. Because it's paper going into the marketplace. And I bet, Kevin, there's so many new traders. There's a lot of people that don't understand that it's a dilution. Not that that's bad, because the cash is going into the company. I'm just, in general, overall, getting people educated as to how this works. You know what I'm saying?
Right. So more outstanding shares. What they're doing is creating shares, selling them in the open market at whatever price they trade, and then they keep the money.
Exactly. And that's
how they raise cash.
Exactly.
Right?
Yep. Pretty amazing.
Pretty simple stuff. Just remember, everyone that's trading Tesla and you're dealing with a pretty smart guy.
Oh, yeah.
In Elon Musk.
Oh.
And he says, well, my stock is running up to crazy levels. Let's raise cash here by doing what? By selling stock at high levels.
Totally. Totally. Pretty amazing, man. And, so what happened last night, folks, is Musk got to be the number 3rd richest person in the world. That's how that closing price on that did it. Kevin, let me ask you, this has been intriguing, the VIX at this level.
Sure.
I mean, it's almost, do you think it's sending a warning sign? I mean, they're buying insurance, right? That's the bottom line, right?
Absolutely right. Remember something, Tom. The VIX, as we know it, which is the implied volatility of the SPX, the S&P 500, is driven by puts, right? And it's driven by order flow on puts.
Yes.
So what that number staying elevated, and remember, rising the second half of the week.
Right.
If you look at the 5-day chart, it was, down under 21 and then spiked up later in the week. Now, Friday, it sold off again at mid to end of the day last Friday and then spiked up again on Monday. But this is telling you that puts are bid
right.
in the SPX, and people are buying protection. That is absolutely what it says. And it could also be, because if you look, the put-call ratios in the SPX, which is not a normal put-call ratio for a stock, they usually trade about 2 to 1 because, like I said, puts do drive the order flow in the SPX. So that usually trades a little higher. It's trading 1.2 right now, the put-call ratio. I'm sorry, wait, hold on. That's the SPY. Let me get the SPX up. Sorry, I hit the wrong one. The put-call ratio, that about 1.5.
Okay.
So still lower than historic on that, which means a lot of little options, both calls and puts, are trading.
Right. Wow.
Wings. They're buying wings. They're buying tail risk.
Yes. Which totally makes sense. You got a good sized portfolio. It's like, man, you got to put something on that portfolio, right? I mean,
Exactly right.
Yeah.
We talked on one of our shows yesterday. We talked about buying put verticals in the SPX,
right,
to just cover the percentage. And you can, Thinkorswim platform has a tool that allows you to beta weight your portfolio, which means you take, let's say you have 100 stocks in your portfolio,
yes,
and you don't know what your exposure is. You click on a button, you compare it to the SPX, and it gives you your exposure in SPX dollars or deltas.
Isn't that cool,
then
man?
You can hedge that.
Yeah.
And you can take some of the risk out of your overall portfolio. It's one of my favorite tools.
Now, I can see why.
On the Thinkorswim platform.
I can see why. And don't forget, folks, okay, this program's archived. You can go over that again. So just what Kevin's saying, you can take a portfolio, you can hedge the portfolio with basically a hit of one button, which is so freaking cool. It's insane.
Right.
I mean,
I compare it to the 19 countries in the Eurozone, right?
Yeah.
All forming one common currency. That's what beta weighting is.
I know, which is so cool, man. I mean, because
Right.
what ends up happening, all you have to be happy with, folks, when you do something like that, is that you're happy where you are right now. That's you're going delta neutral, basically, which is really cool, man.
Right.
Do you know what I mean? So it's like, you're not trying to time this or time that. You're saying, hey, I'm going to take a break here for a bit. Do you know what I mean? And I like where I stand.
Right. It could be, Tom, you could do this for a week. You could do it for a month.
Exactly.
You could do it for 6 months.
Right. Without a tax implication, which is really cool, man. Right?
Right.
Yeah,
Right.
totally. Oh, excuse me. Folks, right here, 45 minutes from now. Kevin, you have a great one, safe one. We look forward to the program.
Thanks for having me on, guys.
Thank you.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tom and Tommy O'Brien. We do appreciate you growling a problem with us out here. We have the Dow up 4, NASDAQ up 103, S&P's up 6. Let's go to Zoom, Tom. The bottom line. This is when
we better. It's going to be out of here. It's going to be through the ceiling before we get over there, man. Pretty staggering.
When I said welcome to 1999, bottom line is that you get 21 years later, and this is a phenomenon that went on, folks, for about probably about a year and a half, at least a good year. And, it's hard to comprehend, but guess what? In this day and age, you can see that digital has absolutely not only taken off. I mean, the COVID has just brought it basically exponential. And there's going to be those monster winners that continue, I say. You know what I'm saying?
Oh, sure. The only reason, I was in college at the time, so I was around. I was working in the brokerage business. Right. But the only reason, 1999, 2000, you had companies like AskJeeves.com that had nothing, basically zeros across the board, right? And they're trading at who knows what kind of multiples of their prices. Zoom, man, they're trading on straight out profit and revenue, which is pretty cool. I mean, the numbers that they put up, man, they took in $2/3 of $1 billion, in 90 days. The market was looking for $500 million, which was already staggering. The revenue grew almost fourfold from where they were a year ago, 355%. A year ago, they made $5 million in profit. This quarter, they made almost $200 million in profits. So real numbers backing this up, man. And I said to you yesterday, I forget whether it was on the show, I think it might have been. I mean, the word Zoom has become almost a new word in the English language that is a verb, almost to the tune of Google, right? You're going to Google something. Hey, you want to Zoom? Right? You want to Zoom? You want to set up a Zoom later? Pretty remarkable when you have the name of your company becoming a word used in the English language as a verb, which is literally what's happened with the company Zoom.
No doubt. And it's the ease of use, folks, that is amazing. Now, what they also have in here, and I suspect this is what we're going to be hearing about, and it's going to drive it in a big way. You know, you have Teams out here, which is the Microsoft deal, right?
Yes.
And there's plenty of analysts that are saying, hey, with Teams, because of Microsoft's enterprise base, meaning, you know, they get big enterprise systems inside large corporations, they're going to be a competitor. Well, I got to find the article in here. Inside of this Zoom, they were talking about the number of Fortune 500 companies that they have that are paying over $100,000
okay.
right now, and it's part of these Fortune 500 companies. You know what I mean? So
sure.
So
and
Microsoft
$100,000
has a competitor on their hands in a monster way.
I would agree.
Yeah.
And you know what's remarkable? I was just discussing with some friends yesterday, saying how do you in 2020 find the space in this sector to compete with the biggest companies in the world? I mean, what happened to Google, man? How did they miss out on video conferencing? How did Apple miss out on video conferencing? How did
so true,
Facebook miss out on? I mean, all they did, and I say all they did, credit to them, because they beat the best companies in the world. And like you said, it probably has to do with the details of the product experience. It's that simple. I've talked about, I have great friends that run a credit card processing business, huge business, and they just transitioned from WebEx. And I joked with them. I said, Web who? Web what? Who are they? They're not even right. And they just went from WebEx to Zoom. And the reason why is because they're dealing with a lot of people who might not be tech savvy,
right.
Okay, to put it lightly,
sure.
And they love the fact of how simple Zoom was.
Right.
It's just staggering that in this day and age that you could say, I mean, what if somebody comes into a venture capitalist firm, right, and they say, hey, listen, I get this great idea. I'm going to create a company where people can chat over video. I mean, imagine the competition. But guess what, man? They did it, and it just goes to show that details are everything, man. And somehow those big conglomerate, tech companies didn't have what it takes. And the only one that did is Microsoft, and that's what we talked about. Microsoft has Teams.
Yeah. They've
gotten it done. They are a competitor, and really it's Microsoft and Zoom, whether they're 1-2 and 2-1, wherever they are. Somehow they created that space, man, and they're there now. That's it. They've created it. They're there. They're the authority almost, which is just remarkable.
Yeah, no doubt.
Yeah.
Let's go inside that NDX, and of course, it's going to be Zoom. That's Zoom in the NDX also.
Yeah.
So Zoom's up 42%. 42%. $137, 463. Now the next one, same, digital company, DocuSign. Bottom line, this thing's up $36 today, breaking all-time highs. This is a company that went from $65 in March to $259. It's another ABC structure up. I mean, it's like.
Yeah, they're out with their numbers, I believe, on Thursday. So you have a couple of these companies.
Oh, they haven't even come out. Oh my God. This is just that Zoom made so much money.
It is. Everyone's saying, hold on a second. These companies now. That's what's dicey though here, because DocuSign has not turned into a verb in the English language.
No.
Yeah, they are accelerating, but they've already just went up. I mean, what is it? Almost like ridiculous. The price appreciation it's had. Is all that warranted? We're going to find out. I think it's Thursday they come out. And CrowdStrike, another big one that they're coming out this week. Yeah. They're accelerating higher as well, talking about internet security, the acceleration, the work from home benefit trade.
Sure.
So, yeah, a lot of those.
You get, there's a big difference. DocuSign is growing, but only by 36%. Only.
Yeah, and no, it's important to say that, man, because you look at the sign of DocuSign, the chart of DocuSign, and I mean, we're up 17% today alone just on Zoom, and you just started the year at about 75, and you're trading right now at almost 275.
Right.
So, a lot of these companies, man, it's, be wary, and there's huge moves priced into these equities too when they're coming out with their earnings. So, number one, the stock just went from $80 to almost $280. Number two, you're going to pay huge premiums for the volatility that's priced into the earnings. But for every time, there's always a Zoom where, you could have bought, and I think Zoom, because I was checking them out, man, and it's just a dicey scenario, but I think you could have got basically an at-the-money call for about $18 that's worth 141 today.
Wow.
Or 1,800 up to 4,000. But guess what, folks? For every one of those, there might be a company that does not do so well in the future, as in it's already priced in, you know.
So you got Amazon, another all-time high today. So, you know, Jeff Bezos, of course, is #1 richest man in the world. His ex-wife now is the richest woman in the world. She just overtook the heir of a big French company. The other lady's 50 years old.
Okay.
Pretty amazing, though. And Musk overtook Zuckerberg yesterday at the close.
I heard.
Yeah.
And he's pretty close. Tesla's only down 1% right now. They're still trading at 493. It's hanging tough, man.
I'm telling you.
Oh, it's crazy, man. I mean, I asked a friend yesterday, not in the market, about, I said, Tesla's almost worth $500 billion. How much do you think Ford's worth?
I know.
I said, geez, 200, 300 billion? I said, no, 25 billion.
Isn't that wild, man?
It is, man.
Dow Industrials right now up 67, Nasdaq's up 131, S&Ps are up 13. Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials up 73, Nasdaq's up 134, S&Ps are up 12.5. Let's go over to Tesla, Tom, and take a look at this. So what's so unique about this, folks, and when I brought up the aspect of how people used to fight in wars, like, when they do direct, this is it's not a direct listing, but it's just about. So let's say that we all own the company. The bottom line is we go to banks and say, okay, instead of doing a secondary, what happens with a secondary is this: a secondary would be, let's say Tesla's at $497. A secondary, if it closed today, Tommy and I, let's say we own the company, would say, okay, we'll sell so many shares as close to that as possible. Normally it would be $490 or something like this, okay?
Slight discount usually, right, yeah. And the banks have to be on board, just to add to it, right? They have to say, okay, yeah, we can sell those shares at, give us a little discount to make sure we can push them out.
And then all of a sudden, they came up with this deal that, hey, listen, man, you do the filing, because regulation-wise, you have to do the filing. And once you do the filing, it's a shelf offering. People have always done shelf offerings. So a shelf offering, it would lay there, but then they would do a secondary on the shelf offering. So you'd know what's going on. In this case, you basically don't know when they're ever going to sell the shares. And I suspect what they did, Tom, and this is what was really intriguing because it's so new. It's like, okay, so I think they picked 5 banks. Let me see here. So.
And they may not know where they're going to sell those shares yet either. They don't have to, really.
They do not have to, that's right. They have 1, 2, 3, 4, 5, 6, 7, 8, 9. They have 10 banks, actually. So the real question is, after this gets done, folks, we'll get the idea of, okay, what bank sold what bank had to sell what. And I suspect the reason they're doing this, Tom, is to see who can get them the best prices over the course of, you know what I'm saying? Because, like, why did you do 10 banks? Because when you're selling into the marketplace, this is very easy, man. I mean, great. You're selling $5 billion. That's not a lot of money for Tesla, man. At $500 a hit. Do you know what I'm saying? But I suspect that they divvy it up so that.
Can you scroll up to the top of that?
Yeah.
Just so I understand it myself. So they have the banks and
they give the banks permission. And what we don't know, and this is on every one of these plans, because this first started in the mining business. That's what I was trying to find out. Like, how much did they let each bank sell, and when did they let it sell? Well, you don't know until after the fact. That's the bottom line.
Yeah.
So I suspect, though, there's so many banks involved that would be the smartest way to basically say, okay, I'm going to find out who gets me the best prices when, in fact, Tesla itself pulls the switch. Like, they might already pulled the switch. We don't know. Do you know what I mean?
Yeah, they could have sold them in the first 15 minutes of the day.
Exactly.
Right?
Exactly. Yeah. They can say we want to sell so much, but it's and what you want to be aware of, folks, is that we're aware of it because being in the mining business, because that's where that baby started. Because there's a lot of shelf offerings that are just sitting there right now. It's like, okay, so as they go, higher, when are they going to sell? Because as soon as it comes out that they're selling, it's not going to be great for the stock. I'm not talking about Tesla. I'm talking the mining business in general. Do you know what I mean? So,
yeah. And, part of this may have to do with the fact that Tesla, I think, has more sell ratings on Wall Street than almost like any S&P company or something like that. The statistics are startling. And so you would be going to those same banks, asking them to lock in a price, and then asking them to push it out to their customers versus now they can just sell it into the market. It's a little bit different, right? It's like, how do you have a sell rating across the board on Tesla? And meanwhile, you're buying their shares at $490 from $494 and trying to push it out to your own customer base. Meanwhile, the volatility alone, Tesla could be at 400 overnight. I mean, it really could. It really could.
Oh, yeah.
So that was part of the deal there, that's saying, listen, maybe they weren't going to get, they would have maybe had to give too much of a discount, maybe if they want the old school style of allowing those banks to give them a price that they could push it out to their own customers. They probably wouldn't have liked that deal, which plays into things as well.
Totally. And if you want to see, what's amazing out of this too, if we wind this back like 3 years ago, they're saying they didn't know whether Tesla had enough money to stay in business, basically. Yeah. Okay. And now, so watch, this $5 billion deal is one half of everything that they've actually raised, because I believe, let's see. Oh, no, okay, so they've raised $14 billion over the past decade through secondary stock offerings. So this is 1/3 versus what they've done in 10 years. Isn't that pretty cool? I mean, but this is the way to do it, folks. The bottom line, this is the way to do it is at $500, a share.
Yeah. I mean, you got to pay attention, man. If Elon thought the share price was going to 600 tomorrow, he wouldn't be selling shares of the company today.
Yeah.
He may sell some, but it's a factor you got to listen to, man. Especially with, the run. Just so to put it in context, right? So Apple gave Elon the idea probably of a stock split. Okay, so Apple comes out with their stock split on their earnings on July 30th. The stock accelerates higher from 95. This is after the split, right?
Yeah.
But 95 up to 110 a heartbeat. Okay, so that was at the end of July, and then you have Tesla within about 11 days. Elon says, "Why aren't we splitting our shares?" And they come out and they split on August 11th. And split adjusted, you just traded from 270 to 500. You're up 80%, 80%, for basically no reason except for the fact that the share price got decreased and ownership got decreased. That's the one that's scary, like 1999, man. When you have nothing of material value happening, and you have the stock going up 80%. And that's after it just went up. Even in the middle of June, you were trading at under 200 at the end of June. And then you were trading at 270 when you split, and now you're trading at 500. How many years of earnings do they have to make up for, man, at a $500 billion valuation right now? Can you go into their earnings numbers when you get a chance to?
Yeah.
Because it's getting a little bit. I said for the first time yesterday to a friend, I said, a short at $500 for the first time ever, and I don't think I'll be doing it, man, because catching a knife that's just going straight to the moon is not the easiest way to make money.
Right.
But you're talking about $500 billion company, and meanwhile, they have some growth, man. But look at 2018, they were taking in $21 billion. And 2021, they're going to take in 42. You got to get a lot more billions, man, if you're worth $500 billion, and you got to get it to the bottom line too.
There's no doubt. There's no doubt. And so what we have seen is that the short positions come down. It's 8.3% right now. It's still 8.3%, but it has come down. That thing a year ago was running at 29 or something, some outrageous number.
They have a PE of 1,065, man.
Yeah.
Seriously.
Yeah. As you wake up in the morning, that's up $200. Yeah.
But hey, that's where, what I mean? The market can be wrong longer than you can wait for it to be right. What's the phrase, right? This Tesla's been out of whack for a while. So don't just think you can short it at 500 and make a bucket load, because there's no reason why it went from 350 to 500, just like there might be no reason why it goes from 500 to 600. So,
no doubt. Yeah. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now up 62, NASDAQ up 117, S&P's up 10.5. We'll come right back, folks.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 77, Nasdaq's up 106, S&Ps are up 11. Bottom line is that we get another day, we get another higher price. And, if you, of course, we've been talking about Tesla a lot, talking about Apple. The thing that is so intriguing, and when I was talking about mentioning 1999, Tom, is that when I sit here and I see what's happening, and, I know 1999, I remember the euphoria in 1999, meaning that you'd walk into the office and stocks would be up basically 20, 30, 40% every day. Folks.
Sure.
And then I even remember just, let's say a couple months ago that, let's say we talked to Robinhood traders, right? And the reality is that they've been right and they're making a fortune. So it's pretty wild, in that context. You know what I'm saying?
Sure.
And what I'm specifically saying is this. I can't go there, folks, okay? But the bottom line is that I know what that feeling is, because it's 20 years later. So it's intriguing because they're sitting there saying, see, I told you so. I told you it's going to go up again.
They are. And hopefully they just can protect themselves, man. Because
I agree. I'm just,
No, you're right. Everything you're saying, man, it is. And confidence breeds more confidence, man. So when you make money forever, you're not going to be afraid of the downturns, and you're going to buy more. And if everybody just keeps buying more, then it's never going to go down.
Right.
But at some point, you reach a crescendo, man. And part of me said $500 on the dot with a offering of shares might be a little bit of a crescendo for Tesla, man. It was sitting almost under 500 yesterday, and I said to myself, no way does Tesla not reach $500.
Right.
And what happened? You reached 500 overnight, and Elon said, I'm selling $5 billion of shares into the market. That might be, it's definitely a variable in play, man. And it's not a variable that usually puts it to the upside, but we have Tesla basically unchanged today. So
I know, man.
Hey, how about, speaking of craziness, you see Kodak?
Oh, I heard this morning. Yeah, let's...
So talk about moves that make no sense. You have a hedge fund getting into Kodak, KODK.
Thank you.
And the stock goes from $6 to above 10 pre-market. You're back to 768, and I believe it was D.E. Shaw.
D.E. Shaw, yeah.
And so they have a 5.2% stake in Kodak. I'm not sure why that means the company's worth twice what it was yesterday. especially with how much nonsense it seems like was involved with this deal in the get-go. I mean, first of all, why is Kodak why were they the ones chosen for almost $1 billion loan to make generic drugs? Okay, but aside from that, maybe it's a good deal. Maybe they said they could get it done. They have the facilities that aren't being used. Who knows, right?
Yep.
But there's just insider trading all over the place. You have executives getting gifted shares like the day before this thing goes public.
Yeah.
It's nonsense all over the place. So yeah, be careful, man. There's no reason why this stock can't go back to $1 or something like that. Even if you have, I mean, hedge funds make bets that have a positive expected value. Okay, they might see this as if it works out, it goes to 60. If it doesn't, it goes to $1. Well, you're risking 6 to make 60. Okay, then maybe I'm just saying it doesn't mean that they know this stock's going to go up, man. There's no reason to think that this deal just doesn't fall through and another company gets.
They could very well. I mean, the bottom line is that when you're talking about large funds like this, they've been around a long time. They very well could say, hey, we get euphoria in the marketplace. We're going to buy it. And as soon as it gets announced, we know it's going to pop, or we think it's going to pop, and we're going to sell it.
Maybe they sold it on the open, which is why it went from almost $10 to $7, and they took all their money.
Exactly. I mean, that's,
very true.
If you've been around, and 1999, this is a 1999 market. In fact, what happened in the 1999 market, there were actually more stocks that would gap up like that. We have one or two a day. There'd be basically 7 to 10 every day. And it's like there was something wrong with you if you didn't, basically get 200 points up on the open. It's like,
this is a 1999 stock, okay? They've done nothing. It's all rumors. It seems like there's criminal activity involved. Right. And the stock's doubling overnight for no reason, just because a hedge fund is trying to make money off of the volatility. What is going on, man? Hey, let's jump back to real companies. How about Walmart? Did you see them talking about the details of their Walmart Plus service 2 weeks from today? That's going to be launching September 15th. $98. That'll get you, I believe, free delivery, no lines, maybe a 5% discount on gas. All you got to spend is $35. And I say that seriously, man. If you're ordering groceries, not a big threshold that most people can reach. Very comparable to Amazon, and you got Walmart, man, up almost 4.4% today on that news. All-time highs for Walmart today.
So here, just walk me through this again. You pay $89 for the year, right? Is that what happens?
$98, I believe. Let me pull it up. I got the article. No, let's go over it. So $98 a year or $12.95 a month. Okay. It's going to require you to spend $35 on the groceries. I'm getting down into the specifics. Okay, they get unlimited free delivery. Okay, that's the huge deal. Yep. Right in line with Amazon. Okay, it's going right after them. Discounts as much as 5 cents a gallon for fuel. Everybody uses fuel in their car, man. Right away, boom. They still have to meet the $35 minimum for each online order, but they're going to allow shoppers to skip the line at checkout. Okay, they're going to allow them to ship it to their home or drop it off at their door. It's $98. Amazon's $119, man. And just so Amazon's grocery delivery through Amazon Fresh is free, they have the same exact $35 minimum, man, on their grocery orders. Okay, so it's coming right after them. And it also includes, oh no, that's talking about Amazon Prime, but you can see that it's a direct competitor, man, $98. And what you really get into is Walmart's grocery business has been one of the few areas, actually, that's grown tremendously. And so they're focusing on that part of their business. They're thinking that if they get people into their stores, they pay the $98, they drop off your groceries for free, you're going to be in their ecosystem, just like Amazon. I can see that being really successful, particularly in these big cities. Because if I just take St. Pete, okay, and St. Pete's not a big city, folks, okay? There's only 300,000 people here. But what does happen is that the people that go to Walmart, a lot of them have to walk. I watch them with their carts. Do you know what I mean? Okay. You're walking up with the carts. You fill your cart up. You got to get it back to your house. Okay, there's a problem, in that context. Sure. I can see that that's going to be, they're going to get a lot of business, man. They're going to get a lot of business, I mean, even if it's just something you're buying staples from, right? In terms of just buying, whether it's paper towels, toilet paper, some cleaners. Yeah. Even if you're not comfortable buying your fresh meat there, you still could warrant spending $98 for the year, and you got free delivery of all those items easy as pie, man.
Yeah, there's no doubt. There's no doubt. 877-927-6648. We have the Dow up 58, NASDAQ up 114, S&P's up 10. Bottom line, market's hanging there. Gold's down $1, 1978. Dollar's trying to bounce, not having much. We rejected a lower price, but you're still laying at 92.147. Tommy and I come right back, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that will take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up by 44, Nasdaq's up 114, S&Ps are up 9. And, once Apple did split, Tom, bottom line is it has, just as you were saying yesterday, made a big difference inside that Dow Industrials, man.
True, right?
Yeah. Walmart's picking it up today, big time. But, Apple at 131 is not, Apple at, 600? Would be, 500, right? Yeah, 500.
No.
Five something.
Yeah.
So.
And that's, you see, it's only adding 17 points in there. You multiply it by 4, it'd be adding almost 80 Dow points.
Yeah. Isn't that crazy, man?
The Dow makes no sense. I told you. I say if you ever assigned a group of students as a high school teacher, right? You said, create an index for me that tracks how the economy is moving. and some student comes in, says, I chose 30 stocks, and all that matters is the price of their shares.
Right.
I feel like you'd have to sit that student down and say, why would you ever do that?
I know. There's no doubt, man. There's no doubt. Bottom line is that, I guess what does happen now is that even when I was reading the aspect that it's so the people in charge of it, they're not only in charge of the Dow, but they're in charge of the S&P also. So now it's one of those deals. It started with the Dow Industrials, meaning the Wall Street Journal. And now that whole board, whatever that board is, that basically selects it, it is what it is. But
at least the S&P, though, it's market cap, man. I know there's all the time.
I'm just explaining that they have it all. So it doesn't, they want that headline number on the Dow.
Listen,
because
all the rhetoric is, and even, all the FANG stocks control the S&P, right? Well, guess what, folks? They control the market cap. So that's the deal,
No doubt.
Yeah.
Stay right there, folks. We got Think or Swim coming up next. Then I'm Mr. Basil Chapman, Steve Rhodes, Dave. Wait, I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.